What is going on, guys? Welcome back to another video. Thanks for tuning into Stock Essentials. My name is Alex, and we're going to be going over 3 EV stocks that you should be watching for the long-term future. As most of us know, gasoline-powered cars are eventually going to be going away, and there's this huge transition to electric vehicles. There's a very huge shift, and it's going to be coming in the future without a doubt. It's definitely inevitable. So we're going to be going over 3 stocks that you should add to possibly your long-term portfolios. We're not really going to be doing short-term options. That's going to be pretty risky, especially with how flat these stocks have been pretty recently. So these are definitely buy and hold positions, whether it be shares or doing some credit spreads or even some leap option calls. But make sure those leap option calls are at least a year out to give yourself the most time on the contracts, especially if in the short term these stocks remain flat. You're going to lose a lot of money. But overall, the best way to play these stocks would have to be just buying and holding plain shares. A lot of people, they want to get rich quick, and that just isn't stable in this type of market. Maybe you'll get a few winners here and there, but overall consistent gains and getting rich quick isn't really the best way to do it. You want consistent gains, and you can do that using credit spreads or just simply buying and holding the stock. And if you have 100 shares, you can simply sell some covered call options to get some weekly or bi-weekly premium, which is going to kind of act as a nice little dividend every single week. So first stock on our list is going to be, of course, Tesla, one of the most popular EV stocks. They're taking over the roads by storm, and overall, they just have really great products right now. Their infrastructure is really advanced. They have tons of charging stations, and on the road, you can see many people driving Teslas, ranging from the Model 3, the S, the X, and even the Y. A lot of people are buying. So overall, Tesla is a very popular EV brand, and especially all their technology that they have jam-packed into their vehicles with their autopilot technology, getting advanced and more innovative by the day. So Tesla's sitting at around $700. Overall, it's up about 140% a year. Past 5 years, of course, it's up almost 1,500%. But it's down around roughly $200 from its all-time highs of $900, as we can see here, which was during the EV hype craze of late January, when tons of EV stocks ran up. All the way from early or late 2020 to early 2021. That's when a lot of people were buying all of these EV stocks. But right now, it's had quite a big of a pullback, and overall, it's kind of flat. It's gonna have its ups and downs, but overall, if you're long term on and you believe in the electric vehicle future, Tesla's a great contender for sure. They're way advanced and more ahead than a lot of the other companies out there. So Tesla is going to be really good buy and hold for long-term portfolios. If you want to do options, there are some option plays you could do. I would recommend maybe a week or 2 weeks out. For this example, we could do an August 20th expiration date. We're not going to be getting into selling cash-geared puts. That's going to require $70,000 collateral, and that's just too expensive for most people. So what we're going to do is we're actually going to do a put credit spread. Tesla's pretty volatile. They have some pretty nice premiums on their options. And overall, if you're a Tesla bull or you think it's going to remain neutral or flat, you could do some credit spreads. Something like a 680 put, you can sell that and then buy the strike under it, the 675. And as we can see, we receive a credit of $88, and we only have to put down a collateral of $500. So if we use our calculator, that's going to be 88 divided by 412. That's going to be around a 21% return in just a week and a half, as long as Tesla stays above $680 at expiration. So that's how you're going to win on that trade. 20% return is going to be pretty good. If you want to be a bit safer, you could choose some strikes a little lower. 670 and 665 is going to be some pretty safer strikes as well, and it does offer some nice premium too. But for this example, we're going to be doing the 680, 675 strikes. So that's Tesla. Overall, I do recommend just buying and holding shares. Going to be really good growth company, growth stock over the long term. Next stock is going to be NIO. Really popular Chinese electric vehicle company, and they're making a lot of great products. Their vehicles look very futuristic. A lot of people are interested, and right now it's just exclusive to China. But if they do expand to especially the US, this stock can definitely explode. And just like Tesla, it had a really big run up during the EV hype craze of from late 2020 all the way up to early 2021, and it's had a nice little pullback. And they also did have earnings recently, and they actually beat earnings, which is pretty good. So a lot of people are pretty bullish on this stock. And they're also planning on entering a mass market EV segment under a sub-brand. So they're going to have a cheaper priced vehicle, roughly around the low $30,000 price point, as you can see here. Right now, most of their vehicles cost around $50,000, and that's just a little too expensive for most people. So they're trying to reach out to most of the consumers by offering a cheaper priced vehicle, and $31,000 for an electric vehicle of this caliber is definitely a great price point and good entry point for many people to get into. So NIO doesn't offer a dividend yet. If you want to buy stocks, you could just buy and hold shares, or you can sell some cash secured puts and try to buy stock at a cheaper price. Unlike Tesla, this stock price is a little bit lower at $43 a share, so you only need a few $1,000s of collateral in order to sell some cash secured puts on NIO. So for example, if you want to buy NIO at $42 per share, it's going to have a really good chance of profit, 71%. But you also have a really good dip buying opportunity. As we can see here, we're going to receive $126 of premium for selling this cash secured put. And if NIO goes below $42 at expiration, we just own 100 shares at $42 each. But our cost basis is going to be roughly around $40.74 because we're receiving a minimum credit of $126, which lowers our cost basis on our shares, which is going to be pretty sweet. So a nice premium this stock has, and it doesn't require a lot of collateral. So I would highly recommend selling some cash secured puts if you don't have any shares of NIO already, because the premiums are pretty good. If you own shares already, you can sell a covered call and get basically a dividend. The premiums on the stock is pretty good as well. On the call side, you can sell somewhere between a $47 strike and a $48 strike, receiving between $77 and $104 of premium, and that's going to give you some really nice income week over week just by selling some calls if you have 100 shares. Last stock on our list is going to be Ford Motors, and this stock has exploded recently over the past year. It's up 88%, and overall it is having a really nice uptrend. They're planning on releasing the Ford F-150 hybrid, which is going to be an electric version of their popular Ford pickup. And a lot of people are very excited about that. The Mustang Mach-E, which is their EV SUV, currently is done pretty well and has gained a lot of popularity within the electric vehicle SUV market. So with this new F-150 hybrid, it's going to get a lot of people interested and a lot of people into their brand, since a lot of people recognize Ford Motors, and it's an established US company. A lot of people already familiar with Ford. A lot of people will just transition from their regular Ford F-150s to this electric hybrid version. So they're going to maintain their already pretty nice consumer base. So Ford Motors sitting at just under $14 per share. Analysts are pretty bullish on it as well. Huge buy ratings, and Morningstar has it as a fair value of $20 per share, which is pretty high considering it's only at $14 per share currently. So it does have a ton of room to grow. So you can just buy and hold shares of this stock if you do so please. Or of course, another strategy is going to be selling cash puts, especially on a stock this size. You can sell something like a 13.5 expiring in August 20th, which is a week and a half, and you receive $12 a premium for doing so. It's going to lower your cost basis to $13.38 per share, which is roughly around 50 cents under the current stock price. So you're definitely going to be getting for stock at a discount. And if you want to see the profit return, it's going to be $12, 13.50 minus 12. 12 divided by 13.38. So premium's not that high. You're going to receive just under 1% return in just a week and a half. But the good news is you're basically buying the dip. And of course, you could sell some covered calls as well if you own shares of this company. So if you have a $13,000 account, sell 10 of these contracts, you're going to receive $120 of premium of credit in just a week and a half, which isn't bad at all. So that's about it for this video. 3 really good EV stocks that you should keep on your radar. They're very, very, very popular, and there's a lot of opportunity with these stocks in order to make a lot of money in the future. So that's about it. Thanks for watching.